Hello guys, today is 4th of October. Today was the NFP day. I don't trade news. I try to avoid trading news as much as possible. Okay, let's talk about today's trades. I took only two trades, technically only one trade, which was this trade in the morning. I will talk about what was the thought process behind this trade and how did I execute it. So when I came on the chart in the morning, I saw a daily time frame. If you look at this, I saw a daily time frame. Uh, this was the yesterday's candle. This candle also closed bearish, but a weaker body. I went on the 4-hour time frame, and on the 4-hour time frame, I saw this consolidation. So this was your resistance area. This was the where price created a support. Let's go on to the 1-hour time frame. On the 1-hour time frame, if you look at the 1-hour time frame, this was your resistance. So this was the candle where I executed the trade. So this was your resistance form on the 1-hour time frame, and your support was down over here. Let's go to the 30-minute time frame. So if you look carefully, this was the resistance. As you can see, this is your recent resistance. Price created a support in this area. Price went up, created price went up, and what it did, it created another support area, another support over here. So as we discussed yesterday, whenever price close bullish after a bearish candle, you can consider it as a support form. So I looked at price, I looked at the chart, I saw, okay, price has broke above this area. Price created a support, and as soon as price created a support, I executed the trade. Let me turn on the history. I executed the buy on gold. This was the first trade that I executed. As soon as I executed the trade, price literally went within a seconds, went 25 to 23 pip in my favor, but I could not secure that position. I thought we had a clean range to the left hand side, so I anticipated that price should at least come to this area, test this area, and then drop. But what it did was it didn't go into my direction. It did went in my direction, but it came back to my entry point. So here is the thing that I would like to point out. Here is the risk management part comes in your trading. Whenever I see price that has moved like a 20 pips or 25 pips in your direction, and if it comes back to your entry point, I mostly close 50% of my position. In this case, I close the entire position. As you can see, the blue arrow indicates that I took a buy, and red arrow indicates that I closed the trade. This was the trade. This was the trade which I closed, and I close around in a $1 loss. But if you look carefully, let me just zoom out. Okay, yeah. If you look carefully, if I had just executed the trade on this candle, oh, let me just, if I had executed as soon as this candle opened, my stop loss would have been below this 30-minute candle. So below, my stop loss was here. I executed, let's say, a trade over here, and I anticipated that price would go into bullish. But even if you see, price was creating a higher highs and higher lows. If you look at the candles, let me show you. Look at all these candles: 1, 2, 3, 4, 5, 6, 7, and 8. All these candles, they have respected the low of the previous candle. This means, this itself indicates that there is a strong bullish momentum into the market. Then what I did was I waited. So whenever I see price going like 1, 2, 3, 4, 5, 6, 7, 8 candles printing bullish, I wait for price to create a support. and price did exactly what I anticipated. The price created a support, I execute and buy, but price went into my favor, then came back to entry point. I closed the entire position. Perfect. I managed my risk. But later on, what happened was the same scenario happened over here again. So here, whenever price creates a bearish candle after a bullish candle, it means a resistance has formed. So in this scenario, what my trade idea was, this was a resistance form. This was your recent resistance. Let me just, this was your recent resistance, and this candle, if you look at this 30-minute candle, it broke and closed above this resistance. Whenever you see price close and break above the resistance, it means the probability of the next candle respecting the low of this candle in an uptrend is very high. I just saw this candle, I executed another buy over here. Price went into my direction for 31 pips. I secured the partials and let the rest run out, which was 20%. And as soon if you look at my exit, if you look very precisely, I exited trade over here, and look how beautifully price just started retracing after my exit. And I after this partial close, I trailed my stop loss below this candle. The next candle stopped me out. But eventually I made $26 on the profit, and closed the day with a $25 in the profit. So whenever you trail your stop losses, make sure you'll have to accept that the maximum times your stop losses are going to get hit. So whenever I see trade idea that I have executed, whenever I close my partials, I anticipate that, okay, even if I am trailing my stop loss, I anticipate the same move that happened in the pre-London session. There's this move. Look at this, how candles are 1 2 3 4 5, they are respecting the lows of the previous candle. So I anticipated same thing to happen over here. But as soon as this candle started breaking the low of this candle, the buy were invalid. I closed the chart. My stop loss got hit because I already trailed my stop loss over there. I close the chart and call it a day, calling this week into the profits. You have to in order to succeed, here is my outro for this video. In order to succeed in this market or any market, all you got to do is to follow your plan, follow your analysis, have confidence in your analysis, have trust in yourself. Don't overdo it. Whenever, if let's just say if I had taken loss on this trade, which I didn't, I secured the profits. But if I, let's just assume that if I had, next candle has started breaking the low of this candle, my day would have been done. I would have called it a day, because this is Friday and it was pre-NFP session, if you can call it. Whenever there is a news in the market tends to range a lot. It has very unusual movements, and you can make literally a lot of loss. Your most of the losses will occur during these news events. So all you got to do is just have trust in your analysis. Make sure you think in probabilities and not in terms of how right you are and how wrong you are. It is very important in any trading profession, I would say. So thank you for watching my content. So help me out to posting more and more content by subscribing to my channel and following my videos. Thank you so much. Have a great weekend.